This is a Momentum Media production.
The SMSF Advisor Show. Your expert insights into the biggest themes shaping the SMSF advice industry.
Hi everyone, and welcome to the SMSF Advisor Show. I'm Miranda Brownlee, and I'm joined by my co-host Aaron Dunn. Hi Aaron, how are you?
Very good, Miranda. A little bit exhausted after a busy week, obviously, at the SMSF Association National Conference last week, but it was a great few days to get together with many friends and colleagues within the industry, and most importantly, hear from a wonderful selection of presenters, including representatives from government and regulators and that alike. So, it was a great week, but this week will be all about catching up and both on some sleep and obviously a whole range of work that needs to be done as well.
Yes. Yeah, it's certainly been a busy time, and it was a great conference. There was plenty of different people there and some really great sessions. So today we'll be speaking to a number of the presenters that were there at the conference, and that will be in a two-part series. So part one, we'll be speaking to 3 speakers, and we'll be speaking to a number of others in part 2 as well.
So what I was going to say there, Miranda, is, it was fantastic that we had a number of these speakers make themselves available for the session. And what you're going to hear is a bit of a conversation with them about, some key takeaways from their particular session, and I guess some of the topical issues in respect to what they covered. And it was great to not only hear from them, but like we said, a whole range of speakers throughout the conference. And in addition to that, we also got to hear from Minister Stephen Jones, of course, and his direct opposition, Stuart Robert, and then things like Michelle Levy. So we get this real attraction of not only high quality industry speakers, but government representatives, the regulators, all really wanting to be front and centre at this conference because it is the preeminent conference within the SMSF industry.
Yes, and it was obviously a special year this year with the association celebrating 20 years as well.
Yeah, so congratulations, of course, to Andrea Slattery, where she received the first life membership too.
Yes. So just to kick off what's making news, you've got some special news to share with everyone with a new appointment at your team, don't you, Aaron?
Yeah, so we had announced in the past fortnight the appointment of Tim Miller. So many people will know Tim in the industry. He was obviously presenting at the National Conference last week. And so it's a great appointment for us coming in as our SMSF Technical and Education Manager. And obviously really excited about him coming into the business in terms of not only his knowledge and the support that he can give, but he's going to be a part of a lot of the training that we do, including our upcoming SMSF days as well. So it helps me out to a significant extent, and really looking forward to getting stuck into the work together with him.
Yes, I'm sure he'll be a great addition to the Smarter SMSF company.
Yeah, absolutely.
And one of the other big things we've seen in the last 2 weeks, there's obviously been a lot happening, but we saw the final report of the Quality Advice Review released publicly. So it had obviously been handed to Minister Jones, but we've now seen what those final recommendations are. We don't exactly know how the government's going to respond to that. My understanding is that there is going to be some further consultation with industry, so we'll still have to wait a while to see where that all lands.
Yeah, so we got bombarded in this kind of week or 2 weeks before the national conference. And I know ASFA had their conference on as well. So we were content rich at this event, and obviously having Michelle speak on Friday at the conference in the QAR panel discussion was quite insightful. And, there's a real push now to get on with things, and there'll be some, concerns, and there are concerns. John Moroney raised some issues in respect to accountants, and I guess the views that were expressed in the final report around how accountants do, or probably more to the point, don't fit into this unless they fit into what is this broken limited license framework. But conceptually, this kind of let's move on in this principles-based approach and profession, and really moving from where we've been, and it's the concept of being transformational was, I guess, discussed many times, and the coalition government is pretty much saying let's endorse these in full and let's get moving. But I think we are going to have to go through further rounds of consultation and consolidation here, and it won't be perfect and it will never be perfect from the beginning, but they are really important steps to take forward. And fingers crossed, as we move through 2023, we do start to see these steps progress and hopefully meet the outcomes of making advice more accessible and, importantly, more affordable as well.
Yep. One of the other big things we saw is the proposed objective for super released. So the government has put forward some potential wording that it might use as part of that legislated objective for super, which has obviously reignited some discussion about super caps and superannuation tax concessions and everything along those lines as well.
Yeah, so this was the other big piece that's naturally come out before the conference around this objective of super. And this goes back to 2014 from memory with it coming through the financial systems inquiry. And again, generally, I think there's support within the superannuation industry to set an objective. The undercurrent of what the intention of this is, I guess, there are some themes that have been very topical in news throughout the past week. If we think about the caps that are being considered because we're looking at sustainability of tax concessions, equity and fairness around the benefits that people might have with $3 million or $5 million caps, whatever those numbers are. And the other thing that the minister spoke of at the conference was this concern of accessing money prior to preservation age for things like cosmetic surgeries and other things. So there'll be, I guess, a real tightening of the preservation standards would be one part of that tone. And then on the flip side, we're looking at how much money is exorbitant inside superannuation, and therefore do we need to contemplate mechanisms that deal with those things as well. So the government's been very clear they wanted to finalise this issue prior to the May budget. And then, what happens thereafter, we will need to obviously wait and see.
Yes. And we also saw the ATO update some of its webpage materials on death benefits and how people should be categorising that benefit payment in terms of whether it's a member benefit or a death benefit, depending on whether they knew the member had died, and they've highlighted a number of factors like that.
Yeah, so this flows on from discussions that have been happening over the past 12 months or so around the timing of when a benefit has been requested to be paid. And the fact that it actually gets paid after the member's death, the question then comes into account whether it is a member benefit or a death benefit. And of course, there is a very distinct taxing point, whether it is paid to a tax dependent or a non-tax dependent. So we've seen the ATO update there. They've got a QC45254, if you want the reference number. And I guess what the message is here is that within the context of an SMSF, awareness that the member has died is a crucial piece in that SMSF context. So we have seen also those private binding rulings that a lot of people were referencing have some text updated in those as well, referencing back to some of the information around the guidance that the ATO has provided there as well. So I think, there'll be a little bit more water to go under the bridge here in terms of this whole concept of, timing of death and member benefits. But we now do have something that is at least some form of guidance that we can go back to, that the ATO has published to help give us a bit more meat on the bones, probably the right word here, rather than looking at these PBRs. But when in doubt, naturally going back and maybe seeking your own private binding ruling would be relevant in those circumstances.
Yes, and the ATO kind of made the point at the conference that no one should really be relying on other people's PBRs for making decisions about this kind of thing, because it is obviously based on a set sort of circumstances, and that might not even be all the details included in that ruling, that private binding ruling anyway.
Yeah, absolutely.
So for this Part 1 conference wrap, we're going to be speaking with Peter Burgess, Deputy CEO and Director of Policy and Education, and CEO.
Now CEO.
Yeah, he's now CEO as of this week, actually. And we'll also be speaking with Shelley Banton, Head of Education from ASF Audits, and
Tim Steele and Joe
Hurley from class. Sorry. Yes. Yes, so we look forward to speaking with all of them. And apologies in advance, I did lose my voice during the conference with the flu. So you'll probably hear Aaron doing a lot of the talking in some of these interviews. So yes, apologies about that.
We hope you enjoy.
So we're now joined by Peter Burgess, Deputy CEO of the SMSF Association, soon to be CEO. We delivered another comprehensive legislative update this morning, and you also were part of the thought leadership breakfast as well. There's obviously been a few big legislative updates in the last couple of weeks or so, which are covered in the talk this morning. What kind of impact do you see all those different updates from the government having on the SMSF sector?
Yes, thank you, Miranda. It's nice to be here. It's been a busy day, and I think it's been a busy week, really, when we think about the announcement earlier in the week from the government, the objective of super. So, it may well be that they are paving the way for a cap on high balances, and it's not something that the association supports. In our view, there is already a cap on high balances, so introducing another cap on top of that will introduce complexity. And I think the other thing to note is, in our view, this is really a legacy issue, that these accounts with very large balances will be washed out of the system over a period of time. So, so that's been a big one this week, a lot of big talking points over the course of this week.
But the positive thing, I guess, from it is that we've seen a government actually land all this in the lead up to a conference. So it's created this amazing buzz, and I know we have this bee theme and the hive and so forth. So thank you. I got that one in before you did. But it meant that there is this real interesting understanding and expectation, and it puts the opportunity for the SMSF Association to really tell its members where they stand on some of these issues.
Yeah, that's right. And it was good of the government to make that announcement this week, the week of our national conference. So it's certainly given us something to talk about. That's not that we have lots to talk about. It's given us extra things to talk about. And of course, we had the quality advice review just a few weeks ago. The report was handed down by the government, so that's also been a big talking point for our industry. And we have a session coming up at the end of the conference, a panel featuring Michelle Levy. So yeah, it's been the government's done us a few favours over the last few weeks in relation to some of these announcements.
And I think, to the association's credit, and I think I've been to every one of these conferences bar one, so it probably shows the age. But the thing that I really love about this conference is the speakers that we put together for the conference, but also the quality that we will attract ministers. We will attract people like Michelle, who have been at the forefront of the development of this quality of advice document. What does that mean to the association in being able to provide the quality of those types of people to an event like this?
Look, it's really important, to have the minister here and to have the shadow minister here. So it's fantastic that they, will be presenting at our conference. We did invite them, and they've accepted that invitation, and it's fantastic to have them on the program. They'll be giving relatively short addresses, but still it's good to hear from the minister as well as the shadow minister. And you're right, the technical content, this conference is well known for the quality of its technical content, and we're pretty confident. We've got a good lineup of speakers and sessions, including yourself, Aaron.
Yes.
So, we're very confident that delegates will be very happy with what they get this year at the conference as well.
Thank you so much for joining us. It's been another great turnout this year, and I'm sure everyone's going to get a lot of useful content over the 3 days.
Yeah. And I guess my last thing is to say, looking forward to you moving obviously into the CEO seat. So what's the thing that you're looking forward to the most?
Yes, look, I am looking forward to it. It's going to be a big challenge. From my point of view, it's really about focusing on our members.
Yep.
And we will be focusing on our members and providing the technical support and the information they need with the help of our accredited educators, such as yourself, Aaron.
Yep.
Our sponsors and our relationship that we have with our regulators and the government just providing information to our members in a timely way, making sure they're kept up to date with technical, which is obviously something that's close to my heart, having a technical background. So I'll be making sure that our members are kept up to date as best I can, and also investing in our accreditation programs. We want to make sure that our accreditation programs remain the gold standard in the SMSF sector. So we'll be investing in that, and of course representing the sector and standing up for people's rights to choose the level of engagement they want with their retirement savings. So that's the focus.
Very good. Well, thank you once again. It's great to catch up. It's only day one, and I'm sure we will see a lot more of you over the rest of the conference. And thanks once again for making the time available to us.
Pleasure, Aaron.
Excellent. Thank you. Right, so we're now joined by Shelley Banton from ASF Audits. Thanks, Shelley, for joining us.
Yeah, my pleasure, Aaron.
So you presented a workshop at the conference on is your documentation up to it? So I'm sure you and Scott were able to pull apart a whole heap of stuff in that case study. So for our audience, can you give us, I guess, some highlights of what you covered in the session, and in particular, some of the interactions that happened throughout it with the audience as well?
Yeah, sure. I mean, at the end of the day, deficient documentation is going to have huge ramifications, not only for trustees, but also potentially for SMSF professionals as well. Because we've got Section 55 of SIS, which says anybody who's involved in the loss or damage that trustees have, then they're going to be caught into that net, and they're going to get caught up into that litigation. We've already seen that with the SMSF audit cases, where those auditors were held liable for losses in the fund because they didn't go through and do their jobs properly. They didn't communicate with the trustees. And this is part of the issue as well as for SMSF auditors in terms of understanding the importance of documentation, especially when you've got long, lengthy documents such as the trust deed, which is the most critical document in the life cycle of the SMSF, notwithstanding the fact that it's difficult to read and it's really only a document that a lawyer like Scott can love at the end of the day. But it does actually stipulate what the trustees can and can't do, notwithstanding the fact that SIS obviously provides, the rule book of what trustees can do. But you do have that conflict when the trust deed's more restrictive than what SIS allows them to do in terms of operating their funds. So we have a whole suite of court cases whereby the trust deed has overruled the intentions of the trustees and members even after they've gone. There's been claims from beneficiaries because the trust deed has actually been the pivotal document in terms of what's been the ability for the trustees to pay out death benefits or whatever to the correct person, which may or may not be in line with what the deceased member's wishes were at the end of the day, because it all hinges on this documentation.
And that representation of documentation, I think, is only growing. And I think having both the legal practitioner there, being Scott, and the audit side, they've become really the big areas of representation around documentation. So you would have seen in, probably in the last 4 or 5 years, in an audit sense, how much of an increased expectation there is around that documentation, coupled with, of course, the increased activity that we've seen in cases, as you were referencing to and stuff as well. Is that the sense that people are getting from these type of workshops, that making sure you've really got your house in order is absolutely critical? And
this is the whole focus of the workshop, because a lot of the time we're thinking of these documents as just being sort of like, we just put the trust deed in place. We don't really need to think about the ramifications of where that's going to take us, but you need to think about it in terms of a whole series of questions of what the trustees want to do, what's going to happen. There can be trustee disputes. There can be, if you don't have the entire chain of trust deeds, for example, how do we know that everything within that trust deed chain is correct? So if there is a dispute, there's lawyers out there who will go right back to the beginning and pick through every single trust deed and see if there's any issues, because that's where, the court case is going to come about. So from a SMSF auditor's point of view, it is important that we have all of those trust deeds on file that form part of our work papers, But if we don't have them, we can't be responsible for any errors in the previous deeds that we don't look at. So it may well be that mitigate our litigation risk for the future. We'll put a comment in the management letter, for example, that would say we've only reviewed the documents that have been provided to us at audit, and we're not responsible and haven't reviewed the previous documents, and therefore cannot state whether there's any errors.
So it's kind of outside of the scope of...
Absolutely. And it may well not be just in the management letter. We may actually decide at the end of the day to put a limitation of scope through our terms of engagement letter. So there's a couple of ways that we can do it. And I guess it depends on how prevalent this is going to become. But we don't want to be that audit firm that's going to be involved.
The next case.
That's right. We don't want to be on the front page of SMSF Advisor for the wrong reasons.
Yeah, absolutely.
You just mentioned the chain of trustees being an issue. Are there any other common sort of problems that tend to arise?
Absolutely. I mean, we've seen already at audit a chain of trust deeds and the errors that happen from one trustee to another. So it can be an incorrect super fund name. It can be a change in trustee, and it can be an appointment of a resignation of an appointment of a new trustee without it being done in accordance with the previous deed, which means that the current deed and the current trustees aren't valid. So then you've got potential breach of Section 17A. So we need to think about all of these things. With the old deeds, I've got principal employer sponsors. They just simply drop off the perch when there's a new deed, and it's about going to a reputable SMSF lawyer who will actually look through this and make sure that that chain of deeds stands up to scrutiny at the end of the day.
So it's a common one that I see around. That requires members and trustees, for example, and only the trustees are doing it. And so there's a range of those things that you're right. It absolutely comes back to saying, what does the document chain require you to do? And then has that actually been followed? Because it then does prejudice the binding death benefit nomination that is in place. And as we have seen historically in more recent times, those cases then will pull apart all of those things.
Yeah, and at the end of the day, we've got situations whereby, you've got to, and what we don't want to see is we don't want to see SMSF professionals who aren't licensed to provide legal advice just to download a trust deed from the internet, because that crosses that border and it actually puts them from the sphere of just providing financial or accounting advice into that legal advice. And it's a quick path to having a dispute at the end of the day. So an easy way that can happen is if you've got a member who dies, you've got one of those cookie cutter vanilla flavoured trust deeds downloaded from the internet, but the previous trust deed has mentioned a beneficiary who wasn't mentioned in the new deed, and therefore it's on. So there's a whole suite of issues that can happen, and it's really making sure that you've dotted your I's and crossed your T's at the end of the day.
And we could probably talk about lost documentation, but we don't have time, and I know the only thing that's lost here is Miranda's voice. So we will cut it off there and say thank you for being part of the SMSF Advisor Show. No doubt we'll be chatting to you throughout the year as superannuation legislation will be changing, and it's naturally going to have a pretty big impact on the audit process too.
Thank you. Thank you
Shelley.
for the opportunity to be here. Thank you.
Thank you.
So we're now joined by Class CEO Tim Steele and General Manager for Growth, Joe Hurley. Thank you both for joining us this morning. So obviously Class hosted the Thought Leadership Fest at the start of the conference. It went through some of the themes about the outlook for the sector and where some of the challenges are and perhaps like opportunities for growth. Maybe start with you, Tim. What's sort of your outlook for the SMSF sector over the next few years?
Well, look, I think the breakfast, highlighted there's actually quite a few tailwinds for us in the sector. I think really importantly, I think the ASIC's removal of the 500k reg guidance last year, I thought was a really important regulatory stance in terms of SMSF. So I would say we have sort of really tempered enthusiasm about the opportunity for SMSFs more broadly, and they play a really critical role, I think, in the overall structure of the superannuation sector.
So, Joe, one of your mentors last year spoke at this conference, and we spoke to him at the SMSF Advisor Show here, Pete Williams.
Oh, yes.
And he's quite buoyant on the sector for those sort of very same reasons. What are some of the things that excite you about the sector today?
So I think from the Thought Leadership Breakfast, particularly that message of SMSFs being the disruptor or the innovator, and I know that is one of the key reasons why Pete is so has always been so excited about what we're doing in the SMSF industry, and we're his kind of people, right?
Yeah.
So, and that's what I love so much about the conference too. Like, we're surrounded actually by disruptors and innovators. And I also love the idea that competition, we create competition in the industry, and being able to move fast, be creative, and kind of jump on opportunities is something that we do really well. And I loved actually what was said around, because of that, we actually raise the standards in the industry overall, and that we see members, regardless of their choice of superannuation vehicle, benefiting from that.
So I think one of the things that, having been in the industry a long time, is we are innovators in our industry because we've got, nearly half of our sector drawing income streams already, whereas in APRA land, retirement income and stuff is a conversation that's just starting to happen. We're seeing more and more younger members, and your data through the class benchmark reports is supporting this, and the ATO statistics. So innovation and getting younger engagement is becoming more crucial as well. What are some of the things that I guess you guys are seeing, talking to your clients about, and looking at even the business models that they need to be moving forward with into the future?
Yeah, I think our clients are obviously predominantly accountants and administrators who are supporting people who've made a choice to actually get an SMSF. And so for us, it's how do we help them scale cost effectively to ensure that we can try to keep down the costs of an SMSF, because that has historically been one of the potential barriers to entry for someone earlier in life and with a smaller balance getting into SMSF. And so we're seeing this overall, I think, reduction in cost. And so people, the right people for the right reasons, are saying, actually, I can have an SMSF. And that was one of the other conversations that came out, is this, and I think Meg has coined this sort of platform for life concept that actually it gives you control, even if you choose not to use it today, but knowing that at some stage, as your life evolves, becomes more complex, your balance grows, you've got the options to make different choices that might be available to you in other structures.
Yep, absolutely.
So it's obviously quite an exciting time for class at the moment, and obviously there's been new leadership. You've joined the middle of last year as CEO, and you as well as General Manager. What are some of the sort of key plans you've got over the next year or so for growing the company and I guess bringing new sort of innovations and things like that?
Well, growth is a key mantra for us, and it was one of the things that really attracted me to join class. I was actually at the conference this time last year, effectively almost a year ago, that I really heard the plans around wanting to not only grow the business, but actually contribute to the growth of the sector, and really taking a lead in terms of helping our clients to grow. So we've made a lot of changes within the business to help us engage better with clients, to understand their growth goals better, understand the challenges, and to help them grow and scale. We always say, if our clients are growing, we're growing, and it's best for all of us if we're all working together to grow the industry.
Yeah, I think that's a really important point too, because you want to ensure that we are moving the sector forward, and the more that we can invest in technologies, and Simon Kustamaka, who we spoke to, spoke about the challenges of resourcing and these things. So having the tools that enable businesses to succeed and allow them to grow, absolutely critical as we move into a potential change in the way legislation will operate. We see quality of advice stuff. So the cycle of superannuation change, financial advice change, means that advisors and practitioners need the technology and stuff to be able to move with them to remain nimble and get the best of what their client outcomes need to be.
And we need to keep innovating. So as a technology solution provider in this space, we need to be thinking about where this is going. And so we're not constrained by the way things are done today. We've got a lot of work to do. I think Joe and I sort of touched on Miranda, new team. We've got a fantastic team. I'm really so proud and feel so fortunate to have the team that we do. We sort of started together on the 1st of August and have been working to sort of reset the business in many ways. Our goal, and I know this sounds a little bit cliche, but we've been working to sort of connect with our clients very deeply, understand their needs, understand what their constraints to growth might be, so that we can ensure we prioritise our development to meet those needs. But we sort of said by mid this year, we'll be almost 12 months in to our time in our roles, we'd love for our clients to sort of feel like class is back. And I know it's not to suggest we went anywhere. We've been continued committing to support our clients, but I think when we talk to our customers, they've said, look, we'd love you to draw through some of the things that made you great a few years ago and make that the core of your business. And so we've been trying to focus on that.
Well, thank you both so much for joining us and offering all your insights, and hope you enjoy the rest of the conference.
Thanks for having us.
Thank you.
So we hope you enjoyed listening to the insights from all three of those fantastic speakers. So in the coming days, we'll be releasing part 2, and we'll be speaking to another 3 presenters from the conference.
So thank you for joining us. Hope you found part 1 of our special edition of the SMSF Advisor Show valuable. Look out for part 2 later this week. Take care and bye for now.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.